Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. As always, great to have you guys back on the YouTube series. Great to be back on YouTube posting again. For today's video, I thought I'd do something a little bit different and enter into a trade live. Show you guys exactly how I put in some of my options contracts. This is live during the recording here. So you can see up on top, the portfolio value is changing as it is active hours trading here. And you can see so far today, not a great start. Down 5.75% already, 25,253. There's only been about an hour of trading or so. You can see these are all the current options I have. I did buy back a few Tesla contracts yesterday to do contracts today. And if we scroll down just to highlight the portfolio here, most of that loss in the portfolio, as you can see here, is Ford. Really an overall red day here with the portfolio, but Ford Motor Company is down 4.7%. There was a very large recall that I saw that I think is affecting the price of Ford currently. You can see that in the screen here. Ford recalls over 1.5 million vehicles. So that is definitely having a negative impact on the price of the stock. But overall, the market is down today as well. If we scroll back up to the top, these are all the current options contracts. And you can see there are no longer any pending contracts for today. The Tesla contracts I did buy back yesterday. So let's go through today and put in contracts for next week. Put contracts in which I will be receiving income to the portfolio for a contract in which I will have to buy Tesla if it gets below a particular strike price. So up on top, let's click on Tesla. You can see also for Tesla, not a great day so far today, down 2.73, 2.68%, $4.92 in the red, currently just under $180. In the middle here, I do have a few contracts that are still pending, 210 put. I'm having to roll those forward as the price of stock does go down. I'll have to roll out further and further into the future. But let's go ahead and do some new contracts today. If we click on trade and trade options, you can see here, it does go over quite nicely the different types of contracts you can enter into. Options contracts can get quite complicated. I'm going to be doing a single leg cash secured put on the bottom right there. But if we go down, you can see there's vertical spreads, strangles, straddles, calendar spreads. It can get very complicated. I'm simply going to be doing a single leg trade, a cash secured put. So essentially, if the price of Tesla gets below a particular strike price, I'll have to buy it for that price. Up on top, you can see a number of different days here. 7 days out will be March 24th next week, and then 2 weeks, March 31st, so on and so forth. These can go out quite long. Out to 2025, but I'm simply going to be doing one for next week in 7 days. You can see the current price of the stock in the middle, 179.11, and then a number of different strike prices. So for example, the 177.50 here, if I click on that, if the price of the stock gets below 177.50 by 324, I'll have to buy it for 177.50. If it stays above that price, nothing will happen. I will keep the premium for the contract. And then I can enter into a new contract next week, or I can roll it forward. But if it gets below that, I'll definitely have to roll it forward or buy it back, because I'll be required to buy the stock at that 177.50 regardless of what the stock price is, which we'll go over here in the trade. So let's go ahead and do 3 contracts. Each contract is 100 shares, so the 550 times 100 times 3 equals that minimum credit, as you can see on the bottom, or in the middle of the screen, I should say, 1,635. If we click on the arrow, you can see exactly what's going to be happening in this trade. You can see the current price is 179.37, and you can see the strike price here is 177.50. So again, if the price of the stock stays above 177.50, I will not be required to buy the stock. The contract simply goes away, and I will keep that minimum credit of 1,620 currently. And again, you can see those prices changing a bit because this is active hours trading. If the price gets below that, I'll still have to buy for 177, but then I can sell off and make an expected profit, as you can see in the green. If it gets all the way down to this price here, this will be break even. So that will be the price of the stock I bought it for, 177.50. The loss having to sell off at 172.10 plus the minimum credit will equal 0. Anything above that, I'll make profit. Anything above this point, nothing will happen. I will not have to buy the stock. And anything below 172.10 or so, I'll be losing money on that trade. So the idea is simply to enter into the contract, get credit. Hopefully the stock stays here. If it goes down in this area, that's fine. I can roll forward or buy the stock back, still make profit. If it gets here, then I'll simply have to roll forward and hope it rebounds in the future. So 3 contracts at 177.50, 324. Let's go ahead and enter into that contract so we can do review. I'll swipe up and that contract will now go through. It may take a while for that to go through, but that is how I do put contracts on the portfolio. In another video, I'll go through exactly what I'm doing. How do I select those trades? I do like 177.50. I do believe the stock will rebound next week, but it is a gamble. If it doesn't rebound, I will just go ahead and start rolling that forward like I did that 210 contract. And you can roll out of these contracts. I've done this quite a bit in the past. I don't think that has went through yet. No, it actually did go through. You can see a credit 1,605 here. So you can see here Tesla 177.50 put sell. Entered quantity 3. Minimum credit 1605. So went ahead and did that on the portfolio. I think that will now show in the contracts. If we go back to the main screen, now you can see those contracts are showing up in the middle. Tesla 177.50 put sell, 3 sells, 324. And so far I have lost $54 on that particular total returned because of the price of the option is going up here. You can see I sold off average credit $5.35. So what can happen is if this does start trending down here, for example, 553 goes to $3 or so, I can buy that contract back, still make a profit, and then sell off again next week. The same thing I did this past week. So that is how I put in those put contracts. Just wanted to do something different on the portfolio. Go through exactly how I do some of these put contracts. With that, I'll kind of end this video. Again, if you guys enjoy the video series, if you guys enjoy the content on the channel, feel free to like, share, and subscribe. Until next video, we'll see you then.